Good morning, traders. It's Thursday, August 31st. Taking a look at the charts, we've got our SPY chart here with our time cycles, and more or less the market has been putting in some pretty good volatility the last few weeks and trying to put in a bottom. And it looks like we're starting to get that nice move up, big move up in large caps yesterday. We had that exhaustion gap down on fear, on news, and filled this price gap that we were looking for to get filled. And boom, we saw it take off for 2 days in a row, and equities are set to open higher again today. Overall, again, it's the second half of these time cycles is when the market usually rallies. You can see the halfway mark, you see the rally, and then the bottoms are usually more very standout near the bottom. You can see here the market pretty much rallied right from this low, but overall, typically we see price move up and continue to move higher going into the late downward stages. It's called cycle skew, and that's where we're at now. The market has moved up, and now we still have half this cycle to go, and we could very easily see this market continue to grind up somewhere into this area. Now we do have a couple VIX and fear spikes time cycles in the mix here, where we could see equities have a pretty sharp sell-off. More or less, we could chatter around here, and this is when we have September 12th. September 11th and 12th and September 28th, where we have some cycles indicating we should see a VIX spike, which means we should see some type of big down day or a couple of down days, and then the same type of thing over here. Obviously, when the cycle gets down near these lows, this is when we start to see more volatility, some big price action, very similar to over here. As the price comes down, you get this huge price action as the market tries to stabilize. Same over here as it comes down, you get big price swings in the market. So that's kind of when things are going to start to probably get kind of ugly and choppy again is September 11th and 12th. And again, more volatility probably carrying through more or less to September 28th with potentially a final washout low or potentially the start of a much larger breakdown breaking this low or potentially even this low, giving us a much larger spike in the market that could actually potentially reverse the trend going forward. So that's what we need to be aware of. And if we take a look at the VIX chart, you can see where that lies in the future here. We've had a lot of fear in the market. Typically, after we get these big standout highs, we see the VIX kind of fade back down. So we're looking for the VIX to more or less fade down as stocks grind higher till September 11th, and then we could see the VIX have some more spikes on the chart going forward. So until then, I think we're going to see this kind of dissipate and fear kind of fade back a little bit going forward. Now, taking a look over at some of the leading areas here, which is the NASDAQ, two big back-to-back up days. We talked about this, I think it was yesterday's video, more or less how it's got this downward, whoop, wrong tool here, downward channel, depending where you want to draw these lines. We've got these highs, and also we've got more or less these other lows somewhere down in this area here. And more or less, we've kind of broken out of that channel. We've broken above this 20-day moving average that is just kind of curling through here. So we're starting to show some pretty good, strong signs here. NASDAQ trading higher again today, and could be off to the races to push to test this recent high and potentially push up to some extra highs here going into September 11th. And same with small caps. They've had a deeper correction. Their small caps are similar to silver in terms of percentage moves. We see small caps and silver always have very big extreme moves in the market versus the more stable large caps like the SPY and gold. But overall, we've got down to this oversold level, had a big rally back up. Yesterday, we closed above the 20-day, which is pretty critical. First step towards a new uptrend. We still have this potential, this significant standout high here that needs to be broken and closed above. So we could come up, tag this level this morning. We are trading higher right at this level in pre-market. We could see it pull back and have a little bit of a pause for a day or two. But overall, we need to break this high in order to really kind of start to show that we are in an uptrend, and very similar type of price action to what we saw over here, where we need to see a previous high broken. So this big sharp bounce here and pull back and rally back up is very similar to this strong bounce that we've had here. You could argue this could have been that washout pullback, and now we're pushing up higher, and we need to break this high, which is very similar to trying to break this high over here. And we could kind of go up, test that level, break through it, maybe pull back for a day or two, but then we should be kicking into an uptrend once we've broken that and continue to see the market more or less firm up going forward. Taking a quick look over at precious metals. Gold, obviously, big pop up there with all the fear. It's kind of faded back down. This morning we actually saw gold flush down and it's recovered back fairly quickly. Silver, let's just take a quick look at silver. Silver dipped down this morning, kind of recovered back. We'll see how the day closes. Overall, I think we're as we go towards September 11th, we could see these precious metals actually hold up a little bit, just because I think people are there's still a lot of fear in the market of what is going on, and as if there's fear in the market, precious metals tend to kind of linger in the upper end of their range and hold up and grind their way higher. But overall, still favoring higher stocks and more or less neutral to negative on metals. I think this could have been an exhaustion pop, and we could see this kind of chop around here and fade down back down to the 20-day moving average, the precious metals, over the next week or so as the market kind of unfolds. Looking at energy, crude oil up about 1% this morning. It did flush down lower and recovering back. More or less, it's getting a little bit oversold on a short-term basis. It came down and pretty much tagged this low. These two days that traded down here kind of tagged that level. We're seeing a rebound to the upside, and we could see this bounce back up potentially to the 46.50, 47 area, at which point we'll see if it rolls back over. And we've got a downside target of 44.78. So this is just three more or less decent down days in the market, and at this point it's just a little technical bounce, a little bit of a buying or short covering taking on at this point, and usually that momentum will stall out and we'll continue to see it come down to hit this target down here around 44.78. Last but not least, here is the US dollar index. We came down, flushed down, kind of broke these pivot lows, which the market likes to do. The question is, how's it going to close the week? This is a very big chart pattern. We go back to 2016, the significant low. We came down, flushed those lows, really a lot of panic in the market. The dollar gap down. Also happened to be on that day with news of the missiles from North Korea. Get a big gap down, and then of course we've seen two big up days to the upside. The dollar set to gap higher and move higher again today. So this could have been the washout low, flushing the market, breaking this low here, and making a nominal new low before starting to rip to the upside. And if this does go to the upside, we got an upside target around the 24.40, 24.39 for the UUP ETF, which is this mimics the US dollar index. And obviously a stronger dollar for a few more days, potentially going into September 11th, puts downward pressure on precious metals at this point. But once we hit that level, September 11th, we could very easily see gold and silver and all those things actually put in a very significant bottom and potentially start to rally higher. And we'll see what kind of selling and panic we see in the market with the VIX and the large caps when that time comes, because I think we're getting close to a significant bottom or this stage where we could see precious metals really start to take off. Let's just zoom way out on this chart here. Precious metals been coming down, kind of meandering lower and lower and lower, trying to build a massive basing formation all the way back from 2013 more or less, and it's reaching back up. So we've lost the downward momentum over here. We follow kind of bear market. We've kind of lost this downward momentum and kind of had a little bit of standout low here, and then a very strong, significant rally back up, and then its first kind of a big bout of selling, and it's coming back. But more or less, the trend was down, and now you can argue that the average trend here is starting to move up, and we need to break this level here. This is going to be a significant level that when it breaks out of this level, we could be going all the way back up to those highs and beyond. And it really depends on what happens globally, wars, currency, defaults, all those type of things. I do feel as though 2018 is going to be a very bad year for the equities market, and precious metals could definitely benefit from that going forward. Anyways, that's it for now. Talk to you in a little bit. Bye-bye.